Welcome back to the Global Business Report here on Arise News. I'm Idia ICN, coming to you this morning from Nigeria's commercial capital, Lagos. The total value of capital importation into Nigeria stood at $2.8 billion in the third quarter of 2018. Now, this was a decrease of 48.21% compared to the second quarter, and the largest amount of capital importation by type was received through portfolio investment, which accounted for 60.5% of total capital importation, followed by other investments, which accounted for 21.07%. For more on this, Managing Director of Cowry Asset Management joins me in the studio, Mr. Johnson Chukwu. Good morning and welcome back to the Global Business Report.
My pleasure.
So, Johnson, the National Bureau of Statistics says the total value of capital importation into Nigeria reduced to $2.855 billion. What would you say is the cause of this?
Well, I think the major thing that has that happened is because we are now in a period of elevated political risk. There are a couple of factors that may have contributed, but the most pronounced of all the factors should actually be our current political situation. If you look at the trend, starting from the first quarter of this year, the first quarter capital importation was $6.3 billion. It dropped to $5.51 billion in the second quarter, and now $2.85 billion in the third quarter. Of course, the drop from $5.51 billion in the second quarter to $2.85 billion is quite drastic. At least you mentioned that's about 48% drop in terms of capital importation, principally because we're living at a period, we're in a period where the political environment has led to what they call an increased political country risk.
Of course.
So foreign portfolio investors are kind of reluctant coming to the country today because as it stands today, they have a risk of one foreign exchange risk. If you observe, we saw a sharp drop in crude price, which had a direct impact on our foreign reserve. And when your foreign reserve is weakened, then the capacity of the country to sustain an exchange rate may be compromised.
Of course.
So that will have the impact that for foreign portfolio investors that are investing in local currency assets, they are cautious of the fact that, look, should the exchange rate move drastically against them, whatever they may have gained in terms of return on fixed income or return on capital, in terms of capital gain, will be eroded by exchange rate loss. So these factors added to the fact that we've seen a normalization of exchange interest rates in the Western countries, particularly the U.S., all contributed. But like I said, the most pronounced will be the elevated political risk that the country is facing ahead of an election period.
Well, but just like you mentioned, the United States emerged as the top source of capital investments in Nigeria in the third quarter until, of course, the political uncertainty and rising interest rates in the U.S. Affected investments in Nigeria. Now, what can Nigeria do to avoid being affected like this next time?
Well, you can eliminate political risk. You can moderate it. And then what I mean by you can moderate it, the electoral process should be such that give people the confidence that the citizens will accept the outcome. So if that's the feeling that citizens will accept the outcome, it becomes a routine process. Today, the British government is talking of a possible vote of no confidence against Theresa May.
It's not going to come to that, of course.
It's not going to throw the economy overboard.
Okay.
Similarly, when elections take place in the U.S., because the U.S. has almost 200 years, more than 200 years of consistent civilian government, it doesn't bring any panic. See, just like you have in South Africa. So as we strengthen our political process so that the citizens or the electorate, including local and foreign investors, will have the confidence that the outcome of the election will represent the will of the people, and there won't be any need for people to object to it. The basic thing that happens is that as election periods are approaching, investors begin to imagine if Nigeria will unravel. And for that reason, a lot of people who are cautious, who are risk-averse, want to stay back and avoid the Nigerian instruments. But the key thing is we need to improve our electoral process. We should have an electoral process that the outcome, however, will reflect the will or the wish of the majority of the people, and the minority should be able to spread their own thoughts.
Well, Johnson, portfolio investments were heavily affected as we saw less of them. So what exactly are investors now looking for, and how can we instill this confidence in potential investors?
Well, if you look at what happened, across the board, almost all the investment categories were affected. Portfolio investment was only $1.73 billion that came in the last quarter of this year. Against, of that amount, equity investment was about $1.6 $9 billion. So in effect, most of the investment that actually came in equity. Because obviously, you're looking at foreign portfolio investors feeling that some of the equity prices are currently undervalued, and they thought they could actually do some bargain hunting. But look at the investment that went into fixed income. Given that we still have very good yield on a fixed income instrument, one would have expected that a lot of investment would have gone into fixed income instrument, but that didn't happen. Probably because I talked about the risk, exchange rate risk that we now face. Because really, if you invest in Nigerian government treasury bills, you know that the Nigerian government will not default on the payment of treasury bills unless if the country unravels. Which is why I mentioned the fact that, look, whenever we are approaching an election period, the concerns are, will this democracy subsist? Will this country remain glued as a single entity after this election? We must be able to take out that concern by having smooth elections. So that's very critical. But as part attracting foreign portfolio investors into the economy, what are the instruments they invest into? Equities and fixed income. Like I said, equity prices have lost close to 20% so far this year. There are some stocks that have lost more than 40%, 50%. Some of them have very good fundamentals, but investors are still sitting on the sidelines. I believe that once we de-risk the political environment by having a free and fair election in February and March, then we should see a lot of these portfolio investors coming back. As for the fixed income component of the foreign portfolio investment interest, you already have yield in the region of 15% some of these instruments, which should actually be attractive to anybody who is arbitraging. What I mean by arbitraging is you can actually borrow in the US at 3% and invest in a Nigerian instrument at 15%, provided you are sure that the exchange rate risk is minimal. Because if you invest in an instrument that is subject to exchange rate risk and get 15% yield on your instrument, but lose 20–30% on the exchange, yes, you are still losing money. So we also must give the investors the confidence that, look, we can maintain a market-determined exchange rate.
And the value of our naira. Mr. Johnson, please don't go anywhere. We'll be back after the break with more on capital importation. Stay with us. Welcome back to the Global Business Report here on Arise News. I'm Edia ICN, coming to you this morning from Nigeria's commercial capital, Lagos. Now, I'm still here talking to the Managing Director of Cowry Asset Management, Mr. Johnson Chukwu, and we're talking about capital importation and moving on to the GDP shortly. Mr. Johnson, now, you were talking about, of course, how the upcoming elections is causing a lot of panic amongst investors who pulled out from a lot of their investments. Now, instead of adopting a wait-and-see strategy, wouldn't it be advisable for investors to be looking into longer-term investments so that they can gain more on all that they're investing in?
You know, interestingly, for investors, investment is all about managing risk. For investors, they should be able to hazard a gaze on the kind of risk they are taking. When the risk cannot be quantified, it becomes difficult for investors to make a move. The reality on the ground is that, like I said, foreign portfolio investors are always afraid that Nigeria will unravel.
Yes.
You know, we've seen several predictions about Nigeria will not go beyond this year or that year and all those stuff. So for local investors, it's a different ballgame entirely because we have no other place. This is our country. And unless if the risk becomes very heightened, that you will see local investors running away, also pulling their funds out of the country to other countries. But for foreign portfolio investors, it's a different thing entirely. You don't want to go into a country that has very high risk, political risk, because we've seen a lot of African countries that unraveled in our lifetime. Of course. We've seen Congo Democratic Republic, we've seen Liberia in the past, we've seen Sierra Leone, we've seen several African countries that actually went down the slope. So foreign portfolio investors are conscious of that. What should we do to avoid that? Is, like I said, we need to improve our electoral process. We need to have an electoral process that gives the people the confidence that anybody who they voted for will win. The concern is always that when a person wins an election and is rigged out, that's when you expect that you could have violence. Exactly. If we have an electoral process and I go to the poll and I contest for any position and somebody else got higher number of votes in a free and fair election, I would not have any basis to really complain. So the key thing that we must have an electoral process, which is actually one of the reasons why I was concerned that the president did not sign the electoral Act bill. Because ordinarily, that would have eliminated to a large extent the level of abuses of the electoral process or the issues of people who do not have, who are fictitious people voting for in an election. I thought that national interest should have superseded whatever political interest, parochial interest that compelled the president not to sign that electoral act amendment. So those are the things people are looking for. They're looking for signposts that would give anybody who is conducting an election the confidence that election will be free and fair. If once we have that, then the election becomes a routine. People will no longer be afraid that things could actually go drastically wrong. Then on the second aspect of your question, why people won't be take position now ahead in the long run, I mean long positions, hoping that things will turn out well. For foreign investors, that's actually a difficult one for them to do. The reality for them is that they look at what is the rate at which your economy is growing. The economy is growing at 1.81%. You say you're going to compare it to the GP rate. What is the performance of your equity market? It has lost close to 20% year to date. What are the risks associated with your foreign exchange stability? Your reserve lost about $4 billion in 3 months. So, and then suddenly your price dropped from $80 to just barely above $60. And these are factors you have to look at and say, look, so what is the outlook on this economy? And then when you now bring in the weight of a political uncertainty, they would rather pull back. Because when you want to take an investment, you're taking some level of gamble. What you do is you do your scenario planning. And you say, this way I can guide, I can eliminate some of this risk, or I can manage some of this risk. When the risk is such a proportion that you can't manage it, you would rather stay back. Because it's better you keep your $1 in your pocket that you gamble, that you're going to make $2 and lose the $1. So that's why for foreign investors, they're going to stay back. If you look at that figure that was published by the Nigerian Bureau of Statistics, of the $2.88 billion, $2.85 billion that came in third quarter, only just about $800 million was foreign direct investment. That were investment for the long term. The rest were mostly short-term investment. The $1.73 billion was basically for portfolio investment. And that was the chunk of what came in. Portfolio investment, remember, the guy is buying the equity today. Maybe he's taking a position to unwind in 2 months or 3 months' time. Or he's buying fixed income instrument will mature in 90 days or less. But the long-run investment, which is the one that goes to foreign direct investment, was quite low. Because nobody wants to take that risk until they have some political clarity.
Well, Mr. Johnson, much earlier when you were talking about what Nigeria needs to do to ensure investors that the country will not unravel if they have any political uncertainty, you had mentioned the UK as an example. Now, the United Kingdom came in second place as the top source of capital investments with $871.1 million, representing about 30.5% of total capital inflow. Now, how do you think Brexit has affected this position?
Well, I think today, you know, London, until this Brexit issue, was actually the financial capital of Europe. So a lot of European investors operate from London, operate from London, basically. So what has happened is that some of them will be relegated to countries like Germany, Frankfurt, or Paris. And what has happened in terms of what came into the country is you can call that the traditional flow of capital into the country. Because aside from US, the UK has remained our first or second source of capital flow into Nigeria. Because when you have a lot of affinity between Nigeria and the UK, one language commonality, and then you have colonial history. But again, you have a huge population of Nigerians in UK. And some of this investment may not actually be coming from Europeans themselves. They may be coming from Nigerians in diaspora that live in the UK. That's
a very fair point, actually, the closeness and proximity of doing business.
So it's not just about, when you see inflows coming from the UK, it may not be coming from European citizens, some of them may be coming from Nigerian citizens who are living in the UK but are investing within the Nigerian market. Okay, so how does Brexit affect the situation? Well, the way the Brexit will affect the situation is that, one, if the UK economy weakens, then the Nigerians in diaspora that have resources that invest in repatriating home may find it difficult to do that. Of course. That's one. Two, if foreign capital, if UK, London loses its status as the financial capital of Europe, then you're going to see a shift by investors away from London to maybe Frankfurt or other European cities. Yeah. And then you'll be seeing flows coming from those new cities into emerging markets, including Nigeria. Okay. So those are, depending on how the Brexit plays out. But I think today, where we are, is that there's a possibility that the UK might rethink that, because should Theresa May lose in the vote of no confidence, then the UK Parliament may ask for another referendum. Okay.
Well, now looking at the Nigerian economy, the GDP, which was released on Monday, has shown an increase, but we're yet to get the unemployment figures. Are investors seeing the true health of this country?
Well, if you look at the GDP figure, for instance, the 1.81% third quarter GDP, an improvement from 1.5% in the second quarter. But you also put in, just oppose that with the population growth rate.
But also an increase from the same period last year.
Yes. Okay. An increase from 1.17% in the third quarter of 2017. Remember, third quarter, we're just coming out of recession. Yes. Okay. But the reality is that for you to appreciate the Nigerian GDP and understand how investors interpret it, you have to put the GDP, you have to determine the GDP per capita. Okay. Until we begin to grow the GDP per capita, which is actually still declining, then Nigeria being a desired investment destination will not be restored, unlike what we used to have in the earlier years, when Nigeria was a preferred investment destination. At the point when GDP was growing about 6–7%, at some point our average GDP growth was about 6.5%. Today, at a 1.81% GDP growth rate, though it's an improvement over 1.5%, but remember your population is growing about 2.7%. Yeah, almost 3%. So what we are seeing is that per capita GDP is still declining. And once per capita GDP is still declining, the incidence of poverty will keep increasing. There is this report by World Poverty that Nigeria, about 6 Nigerians get into poverty every minute. So, and Nigeria has overtaken India as the poverty capital of the world with about 88 million people that are in extreme poverty. So 4 or 5 years ago, India had 176 million people in poverty. Today, they have only about 76 million people in extreme poverty. Nigeria has moved to 88 million. So the reality is that for foreign investors, they are conscious of that, and they are aware that when you have increasing level of poverty, you're going to have continuous increase in insecurity. And those are great concerns to anybody who wants to invest in the country, particularly for foreign direct investors.
Thank you so much, Mr. Johnson, for joining me today on the Global Business Report. That's it for this edition. Please keep it here on Arise News. But for now, on behalf of the teams here in Lagos, as well as London and Johannesburg, thank you for watching.